NVIDIA earnings came in very strong, yet the stock fell after hours. We're going to talk about that. I'm also going to talk about the markets because I believe we're in a period for the next 12 months that's going to look very similar to a time period that I'm going to show you on the charts. So let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, let's take a look at the account, okay? We are kind of hovering near all-time highs right now. Market has been kind of sideways, so we're just collecting those premiums and waiting for those to come in. But if you do want to see me hit my 8-figure goal, you want to follow along that journey, make sure to be subscribed by clicking the subscribe button down below. And if you get any value out of this video, please hit the thumbs up button. That would greatly appreciate that. And I appreciate you being here. But let's take a look at the realized gain loss summary. I want to show you over the last 3 months kind of how this account has performed since the tariffs crash. Okay, so we're up 118K, and you know, most of the year's gains were actually made during the crash all the way until now, okay, because options premiums were so high. So I'm going to show you exactly how I was able to do that, specifically how I'm trading NVIDIA, and I'm gonna show you kind of what I'm doing with the markets going forward, but I'm not the only one doing it. As you can see here in my private mastermind, Options Trading University, we have clients sharing their inspiration. As you can see, Chad yesterday on SoFi had a nice trade there. Mark closed out for a nice gain there. Mike here sharing some inspiration. And we have clients of all account sizes and risk tolerances sharing their inspiration. So if you do want access to my trades and my leaps, entries, and exits right here, then go ahead. That'll be at the top of the description. I'll see you there. But let's go ahead and jump right into it. Remember, I do give away free trade ideas on my Instagram and my free newsletter, which are both down below. So be sure to be subscribed to those. But first, I want to talk about the markets. Then we'll jump into NVIDIA. Right now, we are looking at the CME FedWatch tool. Now, what this tells us is the probabilities of rate cuts. Rate cuts are good for the markets because if businesses can borrow at cheaper rates, consumers can borrow at cheaper rates, more money flows into the economy and into the stock market, and that's usually when we see the markets trend upward. So between now and January of next year, okay, 3 rate cuts are being priced in. So that's pretty aggressive, and then multiple rate cuts going into the end of next year. So this is actually very interesting because if we look at QQQ, all right, this reminds me of a time back in 2019. I'm going to show you exactly what I mean, but there was a time where the VIX stayed very low, meaning there was little to no fear in the markets. And I feel like that's kind of where we're at. So we're looking at QQQ. I do see us short term hitting 590 before we get like, you know, maybe another little pullback for a decent entry, maybe a little baby VIX spike. But VIX is very low, okay? The fear and volatility index is what helps me when trading options and helps me decide how much cash I should have sitting on the sidelines, okay? Because, you know, when we had a VIX spike like this, and we are at VIX 14, most people were 100% invested right here. And then we had the tariffs crash and they had no cash, right, to invest because they were all in right here. Now I had, you know, 20 to 30% cash sitting on the sidelines because I understood that VIX was low, okay? And that's kind of where we're at now. We're at a very low VIX. VIX is at 1484. So there's literally no fear in the markets right now. And I'm going to show you my VIX cash allocation levels. As you see right here, we're sitting between VIX 12 and 15. So technically I could have 40% of my cash sitting on the sidelines all the way up to 80%. Now I'm extremely aggressive because we came off the 5th fastest stock market crash. So I have about 15% on the sidelines. I'm going to have about 20 going into the end of this week, okay? Probably going to up that maybe to 25 as well if we head lower on the VIX. But this is what keeps me safe and what allows me to have some cash on the sidelines in the event of a VIX spike or a market crash or pullback or even a bear market, okay? So, you know, the VIX is very low right now, but it's a very interesting time because it reminds me of back, I'm going to scroll all the way back here, okay, to 2019, right before COVID. All right, so basically we came off a huge VIX spike here, 36, not the biggest VIX spike, but right here in December of 2018, okay, the Fed basically was raising rates into December, and then they decided, hey, we're not going to raise rates anymore. We're actually going to decrease rates going forward. Okay. And they did. And the VIX fell, okay, sub 20. Okay. So VIX stayed sub 20 from January all the way until May. And then we spiked up to 20 to where there was a little bit of fear in the markets, right? We spiked up to 23. But really that whole year, okay, the whole year, I'm going to scroll this line over all the way to January, basically right before COVID, okay? We only saw VIX above 20 3 times that whole year. So as an option seller, it was very difficult because, you didn't know, should we be in? Should we have some cash on the sidelines? There could be a huge VIX spike at any moment. And it was like basically when VIX went to 20, you had to go all in, right? And we only saw that 3 times until COVID happened. So I feel like we're in that period right now where, we just came off one of the biggest VIX spikes, all right, since COVID. And now we're just kind of, chilling in this area. Yes, we saw VIX above 20 back on August 1st, okay? And we could stay low for a while. So what that means is the market could kind of just melt up from here. Yes, we'll have, maybe a 5 to 7% pullback every once in a while, and those will be buy the dip situations. The reason I feel that way is because we're in a similar rate cut cycle where we have aggressive rate cuts on the way. The economy's good. NVIDIA just came off super strong earnings, right? All the tech companies came off super strong earnings. And let's go ahead and get into that, okay? So that's really saying that, our economy is strong right now. And it seems like it's only going to get better from here now that rate cuts are on the way. So NVIDIA beats on top and bottom lines, all right? They said there were no sales of H20 processors to China-based customers in this period. So they blew out earnings. Earnings per share were 105 adjusted versus $1.01 estimated. The revenue came in at 46.7 billion versus 46.06 billion. And this was with 0 H20 chips being sold to China. So just imagine when they actually do start shipping out those H20 chips, they're going to have significantly more earnings, all right? So it's pretty crazy to see that. Also, Jensen Huang in his statement said that the opportunity for us to bring Blackwell chips to China market is a real possibility, okay? Apparently, he personally visited the White House in July and August, which we remember, okay, to secure export licenses for NVIDIA's current generation chip for Chinese AI called the H20, all right? Now, after the meeting, Trump said he was open to making a deal for Blackwell chips, which is NVIDIA's latest AI technology that currently comprises the majority of its data center revenue. So if Trump strikes a deal, right, currently they're giving 15% of China sales of the H20 back to the government, okay? Now, if they are able to make a similar deal with their new Blackwell chips, NVIDIA is just going to keep growing, right? They're just going to keep growing. So they absolutely knocked it out of the park. But after hours, the stock fell. So, this is kind of how NVIDIA performed all of last year too during earnings. It was just like they'd have amazing earnings, the stock would fall and kind of disappoint. But if we look at the chart overall, okay, this is kind of what happened last earnings. If we look at last earnings, they actually popped up and then sold off. So I think that tomorrow they could open up down, but I think the shares are going to get bought up. I think they actually will go back up to 185, somewhere in the 180s, okay? Either way, the stock stayed within the expected move. So right now it's trading at 175, okay? So the expected move was plus or minus $12. I drew those lines here, 169 on the downside and 191 on the upside. So the stock did not surpass each one of those lines, so it kind of stayed within there, which is great for option sellers. So it went right here. It's going to open up right here, 175. So tomorrow, okay, I think is a wonderful opportunity to take advantage of NVIDIA. In fact, I want to continue to size up this position in the portfolio because I believe in the next couple of years, they're really going to benefit from not only the current companies that are scaling up their data centers, but also China revenue, okay? Now that they're striking a deal with the White House. So I think it's amazing. and there's lots of premium to be collected here on NVIDIA. So my thesis is that by the end of year, I think we could hit 200. I don't think that's far-fetched. I don't think that's super aggressive from here, really. I mean, if you look at current price, we'll just go from, from 175 where it's going to open up tomorrow, okay, to 200. That's only another 14% from here. So nothing super crazy, but what makes it nice is that it makes NVIDIA an easier stock to trade. So let's dive into the portfolio. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But if you take a look at the accounts, okay, current position is about 168K in cash secured puts. Now, a lot of these are going to expire this Friday, but probably tomorrow I'll be 90% up on all of these and I could go ahead and close them out, okay? I sold all of these puts to collect about $4,200, including the September 19th. I'll close all of them out, the 164s and all the 170s, close them out at a profit, 90% of premium. And then what I'm going to do is I'm going to go to the options chain. I'm going to go out to the end of September, so September 26th. And let's just say the stock is trading at 175 first thing in the morning, okay? The at-the-money puts are paying out like somewhere around 3.5% ROI. Could be a little higher, could be a little lower tomorrow. Results vary based off where the stock is at and where the implied volatility is at. But I think I'm going to also sell another set of 170s. I'm going to go very close to the money, get max premium, hopefully around 3% ROI. That would be great. All right, because I am okay getting assigned at 170, worst case scenario. Okay, and by September 26th, if the stock goes below 170, I'll be forced to buy 100 shares. I'm totally fine with that, especially off of this news. This is amazing news, and it looks like it's just going to keep getting better for NVIDIA, okay? So 170 is, again, all the way down here. So, from current prices, from 175, it's not that big of a discount. If the stock does fall, it's about almost a 3% discount. From all-time highs, that's about a 7% discount. So that's not like a nice little pullback on the stock. So if it does go down there, I'm happy to pick up the shares, but I don't think it's going to go down there. I think we're going to continue to trickle up just like we did back here during earnings, okay? During this earnings, I think, we're going to see a similar run up here. It's probably going to go down, and then we're just going to see like a nice steady uptrend, potentially to 200 by the end of the year. So that's my thesis on NVIDIA based off their earnings. Very, very strong, very good news, and really nothing has changed on this stock earnings-wise. In fact, the PE ratio is probably going to be slightly lower because they're earning more per share, and the stock fell after hours. So that's my thesis. If we could hit the lower Bollinger Band, if we could get like a nice little sell-off, that might even warrant some leaps. Let's actually check out the leaps. So if I go out, get some leaps, I'll probably go to Jan 15, 2027, and I'll just grab the 70 deltas. Right now, the 70 delta is the 160 strike. I'll pay $5,000 to own that leaps option to control 100 shares versus paying $17,000 for 100 shares. So seems like a good bet to me right there. 3x leverage on my money. But yeah, I guess we'll see how that plays out. I do want to see how the market reacts tomorrow. If QQQ opens up down, maybe VIX spikes up to 15.5. That would be great for a nice entry. So I hope you enjoyed this quick little update. I'll see you in the next one. Take care.